Why is SAF, why does it cost so much more than the jet fuel that airlines have used for like the best part of the last 100 years or so?
We could look at it from a fossil perspective. I've always understood jet fuel to be, for most fossil refineries, not the main product, which means you have some different price dynamics. That could explain part of the difference. When we look at SAF currently, what is the cost build of a SAF? It's predominantly feedstock costs, and that used cooking oil, as cheap as it may sound, is actually quite a desirable product at the moment, because it's not just aviation looking after it, it's also road fuels looking after it, and increasingly also marine fuels looking after the use of used cooking oil, all to reduce their CO2 footprint.
Well, welcome back to the Decarb Connect podcast, or in fact, because actually in this episode we're doing something a little different. Welcome to the Price of Everything by General Index, who are going to be sharing with us a podcast discussion about SAF and the cost and pricing models that are emerging. So why have I done this? Why have I given over an episode of Decarb Connect to another podcast? Well, I felt quite strongly that actually highlighting how products, green products like SAF are priced, feels valuable for the decarb community and just contributes to our thinking about how we keep building these markets for green products. So let me introduce you to the actual host of the episode, David Elwood from General Index. David, hello. Could you tell us a bit about yourself and also how you guys came to record this episode? Because it's not your core line of business, but it's still an emerging line of your business. So tell us a bit about you and how this came to be.
Sure. Well, thanks for the opportunity, Alex. Hi, everyone. It's great to have this chance to speak to the Decarb Connect audience. My name is David Elwood. I work at General Index. We're a benchmark data provider, and I host not only the podcast, but like my day job is pricing director for energy transition. So I'm increasingly looking at a whole range of emerging markets, such as biofuels, feedstocks, hydrogen, and sustainable aviation fuel is a kind of a key bit of the emerging markets as the world looks to decarbonize. The aviation sector is also perhaps one of the hardest to abate. And so in this particular episode, using a relationship that we had with a key budding SAF major, we look to dig not only into the kind of the fundamentals of the market, but also some of the pricing dynamics. And hopefully your audience will find that really exciting and illuminating.
Great. Well, thank you for that. And we'll go into the podcast just in a second. Before we do, let me just say to the audience, we think this is a great fit, but we'd love to hear from you. And if you like more content like this, let us know, because hopefully this is a co-hosting, a guesting relationship that we might be able to build on. But for now, please stay here and listen to David's podcast on the price of SAF.
Commoditization has made it easier to know the price of everything and the value of nothing, or so a cynic might say. I'm David Elwood, Senior Pricing Analyst at General Index, and on this podcast in 2024, I'll be exploring the markets coming to prominence in the age of the energy transition. Commoditization in these sectors is often elusive, pricing and standards far less well defined, and value derived by their capacity to help combat climate change. In the landscape of the energy transition, one sector that is harder to abate, that is to reduce carbon emissions than others, is the aviation industry. Now, the challenge has been set. The big goal for the aviation sector is targeting net zero by 2050. And amid the range of routes to achieve that are alternative fuels. And that's the subject of our podcast today, sustainable aviation fuel. Joining me to do so on the line from Amsterdam is Casper Spitzen from Sky Energy. Casper, thanks very much for joining us on the podcast.
Hi, David. Thank you very much for having me.
Well, look, let's begin by you telling us a little bit about yourself and introducing Sky Energy, because I know the company is a sort of a budding, aspiring super major in SAF to help the aviation industry transition to net zero.
Sure. So my name is Casper. I'm the proud father of 3 young kids, live near Amsterdam, and have been with Sky Energy for 7 years now. I've had my studies in economics, worked at the Port of Rotterdam for some time, and did a bit of commodity trading, and then joined Sky Energy. At first to work on our first production facility that we're developing in Delfzijl, northern part of the Netherlands. And more recently, 2 years ago, I moved into the shorter term trading and sourcing team, where we buy sustainable aviation fuel to sell it on to our airline and corporate customers.
Excellent. Well, I think you're ideally placed. We've had various discussions, and I'm really looking forward to this particular one. Where this time a little bit a novel experience for me. We're broadcasting this, recording this from our General Index HQ in Covent Garden, from the office here. And yeah, really looking forward to digging into the dynamics of pricing, because that's what this podcast, The Price of Everything, is all about. But I mean, let's start with basics, because maybe not everyone is familiar with what sustainable aviation fuel is. So what is it? Like, give us a brief overview, how it's produced, etc. Like, why is it being put forward as like a key solution to helping the aviation industry decarbonize?
Yes, of course, happy to do so. Sustainable aviation fuel is a so-called drop-in fuel, which means you can use all the existing infrastructure for fossil jet fuel and just blend in a portion of sustainable aviation fuel. It is, in today's market, predominantly produced from waste oils. So you can think of used cooking oils or other waste fats. And by using those feedstock, you can reduce CO2 emissions. If you look at the entire chain of emissions, we definitely see technologies developing for the future as well, which will include taking direct CO2 emissions, for instance, and using those to produce sustainable aviation fuel. But unfortunately, that's still some years, if not decades, away to full commercial use. And the thing with sustainable aviation fuel is also that it's really the only solution that we see for, as you mentioned, this hard to abate sector at the moment. Whereas cars and trucks can be increasingly electrified, such is not the case for aviation, unfortunately. Basically flows down to power to weight ratio. It's quite difficult to take those batteries up into the air, so to say. So SAF it is at the moment.
Right. So, I mean, maybe in 20, 30 plus years, we'll be thinking about the price of electricity sources or energy sources for battery power. But until then, we're stuck with SAF, which is a really fascinating bit of the aviation fuel landscape, a nascent sector, as you've hinted at. So some of these technologies, like, could you tell us just a little bit more about those? You mentioned waste oils and veg oils, used cooking oil. So to translate that into into reality, right? I mean, that would be like, perhaps if people are purchasing lots of chips from fast food restaurants, then some of the oils there would be like used cooking oil, and can be being sort of pooled together into supply chains as feedstocks. I'm led to believe that so that's part of like something called HEFA, right? The kind of production pathway. Can you tell us a bit more about that?
Yeah, it's so A jet fuel molecule actually resembles a diesel molecule quite closely, and a fat molecule, whether it's used fat or oils or anything, already resemble diesel molecules quite closely. So the steps you then have to go through in this HEFA process are basically, you need to remove any oxygen from the molecules, and you need to chop it up, if you will, in smaller molecules. And those will then be the SAF molecules that you blend in with fossil jet fuel to achieve those CO2 savings.
And that blend in, that's to pick up on a technical phrase you said earlier, drop in. That's kind of, drop in means that it can be blended with existing jet fuel that comes from crude oil sources.
Exactly. That's exactly it.
Right. And so, I mean, how is adoption for this sustainable aviation fuel getting along? Like the quantities of jet fuel consumed globally. I think we're talking right in the order of like 300 million tons, perhaps more than that a year. And over the duration of this ambition, like to get to 2050 and net zero, the aviation industry wants to achieve this, but it also wants to grow. Like we're kind of expecting that the number of flights daily might double over the next like 20, 30 years. So really, like the SAF is going to be hugely relied on to help achieve both of those things, right? And look, we're not going to get into politics, but let's just say, right, some people think that those are overly ambitious and the two things don't really go together. But let's park that. Where are we at in terms of adoption? What sort of percentages of SAF as part of the overall aviation fuel pool are present currently?
Yeah, that's a good question, and it really pays to see the use of SAF in relation to the overall uptake of fossil jet fuel, because on the one hand, when looking at supply, just to give an example, the factory that we're working on in Delfzijl at the moment will produce roughly 100,000 tons of SAF. So that's it's a considerable size if you look at it as a factory, but compared to the global jet fuel market, it's a small drop. What we see currently is that SAF production and consumption are steadily increasing. I think projections for this year are that there will be up to 1.5 million tons of SAF consumed globally. The interesting thing is that per 1 January 2025, a very important part of European legislation will come into play, which is the Refuel EU SAF mandate, which puts a mandatory consumption of SAF of 2% on all flights in Europe. That amounts to 1 million tons of SAF by itself, and it will quite quickly ramp up to 5% in 2030, and increasingly so the years thereafter. So all in all, I think ambitious is definitely a right word. We're set at quite a ambitious growth path for SAF already, and on top of that, the aviation industry and all the benefits that it brings in visiting friends, family, traveling globally for work, and meeting new people, meeting new cultures. That sector by itself is also expected to grow. So we have quite a challenge ahead of us. Without going into too much of the numbers right now, we will see in our market outlook that we publish twice yearly, we have all the projections combined to see how much production is needed, how much consumption is either mandatory or incentivized in different markets, and where the SAF market will be heading. So for those interested, I'd very warmly recommend having a look at that as well.
Okay, well, you've given us a little teaser there, and I think that's given me license. I will prod you over the course of this and see whether there's any little previews that you can give us. But I just want to reflect on some of what you said there, because I think there's some really important points. And one of it is, like, you focused on the EU, and in terms of the growth of this new sector, the European Union and the broader European market is coming to be a really key place for this sector. And there are kind of like approaches here that maybe are being replicated elsewhere in the world. So it's a good kind of test case for how the industry might grow. Refuel EU, just like clarity for people. So that's like this flagship piece of legislation right from Brussels that was approved by the EU states. So you've hinted there at, like, adoption in the EU is being driven forward by mandates, like actually like requiring the sector to bring to market a certain percentage of SAF. Is that a model that's being followed elsewhere in the world? Are there other incentives, other approaches being taken?
Yeah, it's a very good point you make there, David. I think in general, what we see currently is that there's two main markets for the consumption of SAF. One being Europe. The second one is the US. And it's interesting to see that they take almost a opposite approach. The end goal is the same in increasing the consumption of SAF, but you could almost compare it as a carrot and a stick approach, where the European Union is taking a stick approach and saying, if you do not supply SAF, you will be penalized. The US, on the other hand, take much more of an incentivized approach, carrot approach, if you will, where they want to stimulate production of SAF to make that interesting enough and to achieve ultimately price parity with jet fuel, which, granted, is still some time away, but as a goal to achieve scale in the SAF market, that's a very interesting one.
And how is the US incentivizing? Like, what policy levers or tools are they using?
Yeah, so on for instance, production of sustainable aviation fuels, you will receive an incentive which can vary between some cents or actually dollars per gallon as well.
So like a tax incentive.
Yes, for instance, or you just receive the money once it's been supplied.
Right.
Or there's a system of tradable tickets, where once the fuel is supplied, tickets can be generated, and those tickets can then be sold to other market participants. So there's numerous ways. There's a number of incentives that you can actually stack in the US that are really all aimed at increasing the consumption, increasing the production of sustainable aviation fuels in the US.
I just want to take this opportunity to thank our production partner and sponsor, Jano Media, for their support in delivering the Decarb Connect podcast. Over the last few years, they've helped us to facilitate great conversations that connect us with our audience, and their skills and expertise mean that we get to concentrate exclusively on generating the content, the conversations that engage, inform, and inspire.
So we've got these two different approaches. Maybe this is an unfair question to ask. Can we say at this stage, maybe it's too early to judge whether one is better than the other? Do you have a sense of, here I'm going to prod at the report that you've got coming out. Does the report give any kind of view of whether one will achieve more than the other?
Well, that depends on define better. I think
ultimately bring more supply to market,
exactly.
help the volumes to grow.
Exactly. And when that's the ultimate target, which I think it is, I wouldn't necessarily say that one is better than the other, but if I take a step back and look at the market we supply, So Sky Energy is mainly focused on supplying what we call voluntary use of SAF. We see that there's a growing number of corporate customers that are looking to reduce their emissions from flying. And the easiest way to do that, or the only way currently to do that, is the use of sustainable aviation fuel. When you make the use of SAF mandatory, as in the European Union, the question is if you can tie that to such a voluntary demand. And actually, there's quite a number of our customers that say, okay, this is already going on. We don't need to add to this. So, and this will maybe more of a personal opinion, David, than a broader market view. But I think the good thing about having incentives for usage of SAF is that it plays very well into those voluntary targets that companies are setting themselves as well. So you're almost trying to make it a shared responsibility of reducing the CO2 footprint from flying. And personally, I believe that's a very strong way forward. Yeah, maybe it's just as simple as preferring a carrot over a stick. And we see that there's more and more carrot-happy customers, so to say. So we're quite happy to play into that market.
Look, I want to move us on to talk about some other aspects of this industry as it's emerging. It would seem clear, right, that one of the big challenges for people trying to adopt SAF is securing supply. Could you perhaps elaborate a little bit on that? Like, for those listeners and viewers who maybe pay a kind of a little bit of attention to the aviation markets or the SAF markets, they'll see lots of press releases that talk about new supply here, new supply there, lots of projects, but like they're not all coming online very quickly. So what are the, like, maybe giving some insight from the challenges that Sky Energy sees, like trying to enter this space as well? Like what are these big challenges to help the market grow?
Sure, happy to. I think it's a matter of looking at business cases, and maybe starting at the business case at the end of the value chain of the airline. Generally speaking, roughly 1/3 of operational costs of any airline are fuel related. If we look at current price points for SAF, which are 2 to 3 times more expensive than regular jet fuel, you can easily tell that it's that the SAF, using SAF quickly becomes quite a financial challenge for airlines. That can be in part addressed by using the incentives we just discussed, or it can be addressed by just making use of the fuel mandatory, in which case you're creating some kind of forced level playing field in which everything gets more expensive. But ultimately, it's an extra cost for airlines to use SAF, which is a challenge that needs to be addressed.
So just a basic question then. Why is SAF? Why does it cost so much more than the jet fuel that airlines have used for like the best part of the last 100 years or so?
Yeah, again, a very good question, and we could look at it from a fossil perspective, and I would much rather follow your lead in that discussion than my own. But I've always understood jet fuel to be, for most fossil refineries, not the main product, which means you have some different price dynamics. That could explain part of the difference. When we look at SAF currently, what is the cost build-up of SAF? It's predominantly feedstock costs, and that use cooking oil, as cheap as it may sound, is actually quite a desirable product at the moment, because it's not just aviation looking after it, it's also road fuels looking after it, and increasingly also marine fuels looking after the use of used cooking oil, all to reduce their CO2 footprint. And you can imagine that used cooking oil supply is limited. There's only so much frying going on in the world. That has, as a consequence, that price dynamics impact that feedstock quite significantly. And secondly, the cost of producing sustainable aviation fuel from used cooking oil are actually quite high. And that goes to maybe the other side, or the other business case as well, which is the business case of building a factory to produce sustainable aviation fuels. At Sky Energy, we're quite familiar with that, because it's the bread and butter of our business and our growth trajectory. I've been fortunate enough to work on such a business case for 5 years myself, and it's a balance between getting the investor required for such an investment at the risk appetite they want, balancing their required return on investment. They're normally looking for long-term offtake commitments, 10 years, 12 years, maybe 15 years. And that goes back to the business case, on the other hand, of the airline. If there's no sound policy in place that will last for such a period, that takes the next 10, 12, 15 years, the airline will be reluctant to sign up for any binding agreement for that period of time. So that's, as an industry, one of the main challenges that we're facing right now. On the one hand, we have projections of SAF consumption increasing rapidly over the coming years and decades. For that to be supplied, we need a vast number of production facilities. We need the feedstock, and ultimately for that we need parties that are willing to invest in this, whether it's as an investor in the factory itself, but also we need airlines to step in and commit to those kind of offtake contracts. And thirdly, we're looking for corporate customers that are willing to also take a piece of this responsibility, and that way trying to close those larger business cases.
It's becoming familiar with SAF, familiar with other new markets emerging in the energy transition is really a kind of a baptism into not just supply and demand, but like investment decisions, like the whole kind of financial picture, right, that surrounds bringing a product as complex as an aviation fuel to market. Just going to make a note, just put some figures, right? So like you were talking about like the cost of feedstocks. So like, let's say used cooking oil might be like $900 a ton, like 500, like 300 or 400, 500 maybe on top of that in terms of capex, opex, like kind of processing costs, etc. So we get to a kind of a production cost value for SAF currently of around like $1,300, $1,400 a ton. But when we then add on the premium, right, like the premium for like reflecting the producer's premium, their margin, or a reflection of demand dynamics and how strong consumption is, we might add another 1,400 on, right? So we get up to the price of SAF on a given day, $2,800 a ton, which compares, like, is about 3 times, like between 3 and 4 times the cost of regular fossil jet fuel. And we'll pop some links and things in the show notes here and on our promotional material as well, so people can have a follow up. But yeah, I mean, that sounds at the face of it, right? Like those are really compelling pricing dynamics, like really chunky premiums. Shouldn't there be a huge rush of investors coming to not only support Sky Energy, but all the other budding SAF majors out there?
Yes, I think it's good to realize in such an instance that the market we're seeing right now is one that is short in supply, which gives producers an opportunity to make margins that, well, are considerable. Let's put it that way. On top of that, the expectation is that with new supply coming online, you should go into a marginal cost curve where that margin will actually reduce over time. So one of the expectations in the market is that SAF, the margin component in SAF pricing should come down over time. On the same time, the question is, because there's more production going on, and because that additional production requires additional feedstock, there could be a waterbed effect that pushes whatever margin was made previously into the feedstock market. Because as we mentioned previously, SAF aviation is not the only one, it's not the only industry looking for these kind of feedstock. So ultimately, the question is, when will supply come online? Will it come online in time or too early? Not too big of a chance there, or too late compared to demand. And this, if you allow me, is exactly what we're trying to map in our market outlook as well, to see how those two will interact. And just, well, if you want a brief,
Can you give us a preview? Come on, give us a teaser.
Preview. For now, the market outlook is that up to 2030, supply seems to be keeping up with increasing demand, but an acceleration in demand, whether it's in the European mandated volumes and in US volumes, means that we'll actually need to increase our efforts further still in the decade to come. And then the main question on price dynamics will remain. It ultimately is just a matter of supply and demand dynamics, and margins that are made today are by no means a guarantee for margins that can be made tomorrow, which again will translate into investor risk appetite. And you can imagine if there's uncertainty there, investors will want to be protected against that, which could lead to a slowdown that we really can't use in this industry right now. So yeah, the supply and demand dynamics going forward are very, very interesting aspect to keep in mind when looking at SAF.
It's great. Look, I think we've set some really good context to SAF. I'm going to go with a couple of quick fire questions at you. So the role of SAF clearly is going to be very key in the energy transition. How would you sum it up?
SAF is a necessity. I think it's as simple as that. If we've most of all have enjoyed the benefits of flying. If we want to continue that, and if let's say developing countries will want to do the same, then there needs to be an answer in terms of sustainability. If it's not there, it will evaluate in almost a license to operate discussion, in which airlines or aviation in general will become maybe an elite product, which is, I think, not something that we're going for. There's clear benefits to aviation, but there's also a clear downside to aviation, and that needs to be addressed by SAF.
Okay. And pricing. We've talked a little bit, we talked about the figures, right? The cost of SAF. How vital is pricing? And by that, I think we mean like how vital are benchmarks or having some sense of what the price is. How vital is that to the development and growth of SAF as a sector?
Yeah, that's a very good question, David. I think it's vital to give
It's a slightly leading question. I appreciate that.
Indeed, but for all the right reasons. And maybe it's not even pricing itself, but it's price predictability, if you will. It's having a mechanism against which you can contract, which both the producer, the supplier, and the consumer can use. As we mentioned, fuel is a large component of aviation cost. It's required that we have long-term contracts, but how can you enter any long-term contract if you don't know what the pricing is, if you don't have a forward view on pricing? So for any agreement between parties in the SAF industry, pricing is one of the first, but also one of the most complicated topics at the moment. So any development there is more than welcome.
You gave us a little preview of the trajectory for SAF and supply and demand dynamics, like up to the end of this decade. So I'm going to rephrase this question a little bit. HEFA has been very dominant, right, as a technology. We mentioned that at the start, that this technology reliant on waste oils and veg oils as feedstocks. How do you see the growth of non-HEFA or kind of other areas around like technology pathways over the next 5 to 10 years? Like, should we keep an eye on other technologies? Are there other rising technologies coming to the fore that we should be paying attention to?
Yeah, you should keep a very close eye on that and pay very close attention. If you take that specific time horizon, in 5 years from now, my personal expectation is it will predominantly be HEFA. But at some point, feedstock shortages will be, or feedstock availability will be such that other technologies need to come online. Luckily, that's also when we expect them to come online. There's technological development still being made and still needed in, for instance, alcohol to jet, which is a technology that uses ethanol, alcohol, if you will, and upgrade it. That will unlock a whole new type of feedstock. And then ultimately, maybe if we can call it the holy grail, is to get CO2 from the air, whether as a point source or as from direct air capture. And if we can close that loop by making from CO2 ultimately fuels again, whether they're aviation fuels or other fuels, that to me sounds like the thing we need to aim for as an industry. It's that feels like a holy grail. That feels like something to be like a real proper achievement as mankind, maybe. Not to make it too big.
Well, we're aiming big, yeah. Okay, right. So let's wrap up. If you were to boil down the SAF market into 3 words right now, what would those 3 words descriptors be?
I would say it's definitely an exciting market to be part of. We have some very ambitious targets that we're looking to fulfill as an industry. But boiling down, it's a necessity. It's something that we have to do as an industry to allow for growth.
Hang on. There's way more than 3 words, but I think I'm going to tease them out. So yeah, I think we had exciting, we had ambitious, and essential. Is that like this going?
If you will, necessity. Yeah.
Necessity, necessity.
Necessary, maybe.
Necessary. Okay. Right. Exciting, ambitious, and necessary. Well, Casper, thank you very much for joining us on the podcast today. Really pleased to hear your thoughts and discuss the SAF sector. So thanks very much for joining us.
Thank you for having me. It was a fun discussion.
Great. Well, look, to all of our listeners and viewers, you can check out more about General Index at general-index.com. We'll provide some links to Sky Energy as well in the show notes. But until the next time, You've been listening to The Price of Everything. Well, a big thanks to our friends at Decarb Connect for sharing this episode of The Price of Everything. SAF is emerging as a frontrunner for reducing carbon emissions in the aviation sector all around the world. So it's great to work with companies like Decarb who can help spread the word to audiences who share in the vision of CO2 reuse.
At Jano Media, we recognise that great content has the power to create impactful and positive change for lives and society. Whether that's video, live streams, photography or podcasts, partnering with us will enable you to harness the power of content to engage, inform and inspire. Reach out to us today.